Hi, my name is Jim and I was retired. In the past few weeks, I've seen some crazy ideas on inflation that I believe are just flat wrong, including this Wall Street Journal article on Friday that proposes that old-fashioned wage and price control might be a good idea. Seriously? So in this video, I'm collecting all of those ideas and we're going to focus on how not to fight inflation. Stay tuned. This week's video is a little bit delayed as I'm recovering from a mild case of COVID. I am triple vaxxed, but I still got something, so be careful. Each day that passed by was another crazy article on inflation that I wanted to include in this video on how not to fight inflation. Stay tuned to the very end for the one I think just takes the cake as the worst idea to control inflation. But let's start with this Friday article in the Wall Street Journal by Jason Zweig. An old way to fight inflation gets new fans, and he looks back at the history of wage and price controls, including World War I and World War II. But I am just amazed that he found current economists and some prominent politicians who think this is an approach that we should try now. Have they forgotten the Nixon wage and price controls?
The time has come for decisive action, action that will break the vicious circle of spiraling prices and costs. I am today ordering a freeze on all prices and wages throughout the United States for a period of 90 days. In addition, I call upon corporations to extend the wage price freeze to all dividends.
That action led to the great inflation in the late 70s that had to be controlled by Paul Volcker with some dramatic action from the Fed. Let's take a look at a chart of the consumer price index that's in Jason's article. And if you notice, zooming in here, this is when Nixon tried those wage and price increases, which dramatically led to these spikes in inflation in the Great Inflation. Nixon-era wage and price controls would do nothing to remove the excess money that's in the economy that's the true cause of the inflation that we're experiencing. So that's my first example of how not to fight inflation. Now that CPI chart did show a very modest decrease in the annual year-over-year inflation rate from 8.5 in March to 8.3% in April. And we also saw a modest decrease in the Personal Consumption Expenditures Index, which is the Fed's preferred measure of inflation. And in April, that also declined very modestly. The Bureau of Economic Analysis reported the April PCE index went to 6.3% year over year, down from 6.6%. Again, a modest decrease, but they're still at 40-year high levels. The PCE is 3 times the 2% inflation target. So the latest PCE report also showed a decline in the personal savings rate in April to 4.4%. And that suggests people are taking savings to pay for the gas pump and the grocery store bills that they're now facing. So what does this suggest for the Fed's battle plan to fight inflation? Well, we also received the minutes of the May FOMC meeting, and it suggests, as we thought, that most participants are on board with half-point increases on the table in June and July. The question is, what happens in September? Now, there are clearly some voices on the FOMC that say that we are going to need several half-point increases, and we should front load the increases in the early part of the year and then taper off. Now, some think, like Bullard, think that we should keep on going with half-point increases through the balance of the year. Then there's another camp that suggests in September we should cut back to quarter-point increases for the rest of the year. And then there's Raphael Bostic in Atlanta, who suggests we should pause in September and give inflation time to catch up. Well, fortunately, I think there are enough voices on the FOMC that pause is off the table. We are either going to see quarter-point increases in September or a continuation of half-point increases for the balance of the year. Now, I created this graphic line chart to show that consumer expectations from the University of Michigan have been pulled higher by continued monthly PCE inflation readings that remain at 40-year highs, as I mentioned. Now, the Fed funds target rate is currently at 0.75 to 1. And if the Fed sticks with half-point increases through the end of the year, the range will get as high as 3.5%. But if the doves prevail and we go down to quarter-point increases starting in September, we're only going to reach a high of 3% by the end of the year. And if that camp that wants to capitulate and pause in September gets their way, the Fed would be even further behind schedule. Keep in mind, they're about a year late. They should have been starting to raise rates last fall. Unfortunately, there are some on Wall Street that suggest the Fed have done enough. They don't really like to see the impact that the Fed tightening is having on Wall Street values. But we're only going to see higher inflation persistently if we don't tackle it now. I'm reminded of a squirrel in the middle of the road. It's the squirrel that pauses in the middle of the road that becomes roadkill. So that's my second way how not to fight inflation. Don't pause. Keep on with the fight against inflation.
I said when I came to what Congress and the President can do to fight inflation, Americans have two potential paths forward. The first is my plan, the Democratic plan. Plan put forward by congressional Republicans is a second alternative. Here's how each of us would tackle inflation. My plan is to lower everyday costs for hardworking Americans, and lower the deficit by asking large corporations and the wealthiest Americans to not engage in price gouging and to pay their fair share in taxes.
So President Biden had that remarks early in May, and he followed up with an essay op-ed in the Wall Street Journal with his, quote, plan to tackle inflation, which amounted to leave the Fed alone, blame price gouging, and raise taxes. President Truman had a sign that famously read, "The buck stops here." President Biden invited Chair Powell over to the Oval Office to pass the buck on inflation to him. Now, in part, he's right. As I've said in previous videos, Milton Friedman said that inflation is always and everywhere a monetary phenomenon. But that doesn't mean that fiscal policy decisions haven't contributed to the problem. And in fact, the Fed could have countered some of the bad fiscal policy of massive spending with a slight increase in the rates that would have helped keep inflation under control. Instead, they put dollars on the balance sheet to pay for things, and that drove up the balance sheet to $9 trillion. That's the excess money that's in the economy that we have to get out of the economy to solve inflation. So blaming price gouging corporations for the inflation or proposing continued fiscal spending with a build back better on a budget are not ideas that will help take money out of the economy. You got to reduce the money supply to get inflation under control. Grow the economy by removing true barriers to the supply chains. If you want to solve the energy problem, for instance, let's start drilling again in the United States. Let's start following a all-of-the-above strategy again. The Biden administration shut down U.S. gas and oil production on day one. That should have been reversed as soon as we ran into problems. My final example of how not to fight inflation are these two quips from Treasury Secretary Janet Yellen and California U.S. Representative Katie Porter.
I believe that decades of research have established that there's a causal link between access to abortion and the quality of women's lives. It affects their education, their earnings, their careers, and the subsequent life outcomes of their children. And I believe that overturning Roe would prevent large numbers of women from managing their reproductive lives.
How does inflation compare to this newly important, in the sense of the Supreme Court decision pending, abortion issue? How do those two issues compare?
Well, I don't think they compare. I think they actually reinforce each other. So the fact that things like inflation can happen and it can become more expensive to feed your kids and to fuel your car is exactly why people need to be able to be in charge of how many mouths they're going to have to feed. So I think the fact that we're seeing this jump in expenses, that we're seeing people having to pay more in the grocery store, pay more at the pump, pay more for housing, is a reason that people are saying, I need to be able to make my own decisions about when and if to start a family.
Using abortion to increase women in the workforce or lower the number of mouths to feed in the family is a morally bankrupt idea on how to fight inflation. And I truly think we need to move beyond that. Jonathan Swift famously wrote an essay on eating babies to solve overpopulation, but that was recognized as satire. It should not be part of an economic approach on how to fight inflation. I'll conclude with my standard warning. I am not an economist. I am not a financial planner. I have no special initials after my name. So take these as entertaining ideas from one educated consumer to another. Always do your own due diligence and seek out a professional if you need one. I'll see you next time.